G'day. It's Scotty from Zenium Real Wealth and the Real Property Real Wealth podcast. All right, this is our September 2019 property markets update. We call it property markets because, as we all know, there's not just one Australian property market. That's very general. There is a bunch of property markets that make up our Australian market. So we kind of take a look at the ones that are performing and the ones that aren't. All right, so as a recap, if you missed our last week's episode, we spoke with Mark McGill. Mark was an architect who turned dark, a bit like Darth Vader, and went to the dark side and became a real estate agent. However, Mark has done really well at property investing, and we had a chat to Mark about some of those design cues and trends and things that he looks for when he buys investment property, and what's made him so successful. And he's even been successful at Off the Plan. So look that one up on the Zenium Vault or the Real Property, Real Wealth podcast. All right, 2019 September market update. Let's have a look through a few things here. And I will just going to share my screen for those of you that are watching. All right. Yeah. Okay. Okay, so this month again we saw interest rates do nothing. The RBA has left interest rates on hold, and that has meant that absolutely nothing happened. All right. You guys see my screen now? All right, so we've got up here an ABC News article simply saying that interest rates are to stay on hold at 1% as Reserve Bank holds fire despite stalling economy. All right, so big news is no news, okay? Interest rates are on hold. Pretty sure that everybody that is associated with Zenium or the Real Property, Real Wealth podcast already knew that. But there is talk of quarter basis points cut before the end of the year. The thing is, there's always talk of cuts or rises or whatever, and really you can read into that however you want. We always cover interest rates on our market update each month, and really it's just a number. Okay, does it give sentiment? Does it say that this economy is going some way, is going another way? That's for you to decide. But at the end of the day, we just report. Okay. All I can say is that it's really, really low, okay? Compared to long-term averages, it's really low. And in fact, it's getting a bit too close to zero for my liking. And we'll touch on that later on in this episode, because we'll talk about negative interest rates and what that actually means. All right, so let's go to some news reports around the country. Okay, what do we got here? Okay, we have Australian property markets roar back to life after 22 months of falls. Okay, this is a Yahoo Finance. So anything with the word finance means it must be right. Okay, so national home values grew by 0.8% over August, suggesting the Australian property market may have turned a corner. So that's good. Let's write an article just out of one data set, and we'll make an article out of it. Pretty much that's what this article is about. This is the first time since the national index has increased since October 2017, CoreLogic revealed. All right. It came after July, which saw property values neither increase nor decrease. So that just means that the month before they did nothing. This month they have grown a little bit. Look, a month is a pretty small time in property, okay? If you can try and track a property market's forecast by month, and using that crystal balling, you're doing really well. So we might just leave that one there. You can go across here. We will look at how each state performed. So Sydney, total return, is down. Brisbane was up, Melbourne was down, Adelaide was up, Perth was down, Hobart was up, Darwin was down, Canberra was up. Like, it's literally It's like running your finger across your knuckles, up, down, up, down. It's all over the place. So it's really still a mixed bag. And once again, this completely demonstrates what we said at the top of the hour with us saying that there is not one property market. There's so many different markets that make up the Australian property market. All right, next article we have to buy or not to buy, news.com.au. Australian housing prices set to shift. Well, awesome. What does that even mean? Okay. Australia's housing market is in a situation that can't continue forever, and a seasonal change will give us answers sooner rather than later. Once again, I think this is another fluff and bubble article that's just grabbed a piece of data and decided to make an article for clickbait. Once it says here, Australia's housing market is in a situation that can't possibly continue. High auction clearance rates and prices rising sharply, plus really low amounts of stock being put up for sale. There's got to be a change one way or the other. Well, we're not seeing that in everywhere we're looking. We're only seeing that in some areas. So once again, it's a snapshot, and they've extrapolated that across the whole market. What does it mean? I don't know. We'll know in 3 to 6 months' time. Is it going to be better than now? Potentially. But I think it's very, very soon to start forecasting of we have a couple of good months, and then, right, the end of the world is over. Now we're on to boom time. I'm not so sure. Next article, domain.com.au. Melbourne's spring housing market set for a slow start as buyers compete, but owners hesitant to sell. I've read through this article. Once again, it just goes round and round. It says that it's a slow start, but auctions have been really popular. There's not much stock, but there's not enough stock for buyers. It's just a talk article. But this is the sort of stuff that's in the media. The reason I'm showing you this is because this is the stuff that gets talked about on social media, mainstream media, and at the pub, right? Oh, did you see that article on such and such? Auction rates are this. Oh, did you see that latest developer that went bust? Did you see this? Did you see that? And all it does is it's talking points. But what's the reality? Where's the reality? It's too early. You can't judge Australia's property market on 1 month's activity. It's ludicrous. All right. Finder.com.au. Oh, this is a reliable website. Is the Australian property market starting to recover? Question mark. A mix of positive and negative economic signals make it hard to read the property tea leaves. Well, this guy's pretty much saying what we're talking about tonight. Okay? It's just what we're seeing is that fluctuation at the bottom of the market as an overall. It's just there's been limited activity coming into here. Springtime always brings more activity in the property market from a person perspective. It doesn't always mean that there's more actual sales happening. It just means there's more people that have come out of hibernation that are looking around at property. And that's what you've got to remember is that activity doesn't necessarily equal results. Okay, you can go to have an open home in winter and you get one person through and that person buys the property. You can have 50 people through an open home in spring or summer and no one buys the property. Who cares how many people's through an open home? Who cares how many people are registered at an auction? What we want to know is what are the results. It's not about this gut feel or this market sentiment, which is just a bunch of emotions mixed in to try and work out a number. We want to know what the actual data is and where's it headed. And that's what we're hard to get that at the moment because it is floating along in an ups and downs, troughs and peaks type model. All right, this one here, we've personally seen buyers become a little bit more interested now. I think there was a confidence change after the election and we did a webinar specifically for that. And I still think that is carried on now. People are perhaps a little bit more buoyant. But I think there's a lot of other factors that go into what's happening in the property market. And I think that we'll cover them towards the end of this episode. All right, next article, we've got a macro business. The latest QBE housing Australian Housing Outlook 2019 to 2020 is based on forecast by BIS Oxford Economics. Okay. It projects only tepid price growth over the next 3 years across major capital cities. So it's just saying steady as she goes. We've actually downloaded that report and we're going to take a bit of a closer look at that this evening. It's saying it's only tepid property price growth, but this is a 3-year spread on these figures here. And for those of you that are listening, we have Sydney at 6% growth to 2022, Melbourne at 7%, Brisbane at 20%, Adelaide at 11%, Perth at 7%, Hobart at 4%, and Darwin at 7%. So most of those figures, bar, say, Adelaide and Brisbane, are a little bit average. 20% growth in 3 years in Brisbane, that's a real decent number. And that's something that perhaps you should be considering. And we'll take a look at that shortly. If you do want to download that report, that is on the qbe.com website. So www.qbe.com, and it's in their news/reports and articles section. So go to news and reports and articles, and you go to their QBE Australian Housing Outlook. Download the report, and you can download that report there. We might take a look at that now. And I'm pretty sure I've got that open somewhere. Let's see. All right. Okay, so let's have a look at this QBE report. Now, for those of you listening, we've got a whole bunch of numbers on the screen. For those of you watching, it's all color-coded, so it makes it nice and easy. The numbers here that I'm running my mouse over, 564, 554, that's in hundreds of thousands. So that equates to 548,000, 564,000, etc., etc. So that's all the results from previous years. So if we go back to 2002, okay, so we've got Sydney. The median price, okay, was 438,000. And in 2019, it's 983,000. Now it peaked in 17 at 1.194 million. But if you look back, I mean, that's still a very, very decent sort of increase, right? From 438 to 983 to now. That's forecast to grow in 2022 to a median price of a little over $1 million. So 1,040,000. Okay. Melbourne, 285,000 back in 2002 to 770,000 now, with a forecast to 810. Okay. Brisbane, this is an interesting one because Brisbane had the third-ish cheapest property in 2002, and it's grown quite a lot. So we've got 194,000 was the median house price in Brisbane 2002, according to this report. We've got 548,000 is the median price now, and we've got it growing to 660,000 in 3 years' time. There's 110,000 there. If you bought a median house in a median suburb for a median dollar value of 550 grand, this report is saying that property was worth 660,000 in 2022. You just made yourself 110 grand by simply holding a property. It's very interesting. When you look back at 2002, 194 to 548, it's pretty good growth as well. And it goes on and on for all the capital cities. So really the standout there is Brisbane with the forecast, and Adelaide. We're looking at taking it from 488 now, so 488,000 is a median price, to 550,000 in 3 years' time. So that's a pretty interesting chart. There's a whole bunch of stuff in that report. As you can see, they talk about supply and demand and all that sort of stuff and that. So that report, as I said, I've given you that link before. I'll put that link in the show notes as well. And that's a pretty good report to have a bit of a look at once again, those reports are taking data and someone is interpreting that and giving their opinion. Okay, so for every month, we take a look at the HTW property clock. Okay, so let's have a look at that now. So for those of you who are following along at home, go to htw.com.au and you click on the month in review, which is under the news section. So it's news/property report, month in review, and you can download that property report there. So that's the website on the screen, and the website is htw.com.au, which is HTW's Herod Todd White. Okay, so we'll start with this picture here. So I've grabbed the clocks out of the clocks I want out of the report for the evening, and we haven't discussed this one before, but I thought I'd chuck this in tonight. It's the national property clock for offices, so as in, like, you know, where you go to work, right? So this is office space. Now remember, the suburbs in a colour are different from the month before. So this clock is highly active. There's been a lot of changes on this clock. Like all HTW clocks, the peak of the market is at 12 o'clock and the bottom of the market is at 6 o'clock. At 3 o'clock, we have a declining market, and at 9 o'clock, we have a rising market. Okay, so at the peak of the market for office space right now, we have Byron Bay, Coffs Harbour, Dubbo, Illawarra, Melbourne, southeast New South Wales. It's pretty broad, isn't it? Sunshine Coast. Okay, so peak of the market. We've got approaching bottom of the market, Gladstone and southwest WA. At bottom of the market, we have Bundaberg, Cairns, Darwin, Hervey Bay, Hobart, Launceston, Mackay, Perth, Rockhampton, Townsville, and Wide Bay. So there's a whole bunch of regional Queensland office space at the bottom of the market. I'm not a massive fan of regional Queensland office space, but I guess you could say it's at the bottom of the market. And if you're into that, maybe you should consider looking at it. We've got to start a recovery. So we're sitting at like 7:30 on the clock of Adelaide, Brisbane, Canberra, Central Coast, Emerald, Ipswich, Mildura and Toowoomba. So a bit more Queensland regional sort of stuff, plus Adelaide's coming out, and Brisbane. It's interesting to note where Brisbane is on this clock, because the Brisbane office space is in recovery mode, according to HTW, and as you'll see on the next clock for houses, Brisbane is still at the bottom of the market. All right, we've got approaching peak of the market as we go around to, say, 10:30 on the clock, getting up to that 12 o'clock peak. We've got Geelong, Newcastle and Sydney. So Sydney is approaching peak of the market for office space. So that's HTW's interpretation there. We don't do a whole heap in office space, but I thought it was interesting because it was a highly active month with all the colour on there. And it's also interesting when we compare it to the next clock, which is the houses clock. Okay, so Brisbane, for example, is at 6 o'clock on the national property clock for houses from HTW, which is the bottom of the market, whereas their office space was in recovery mode at the top of the market. Sorry, not the top. It was moving around to a rising market to hit the top of the market. So it's interesting to see where commercial and retail office space and that sort of thing sit, as opposed to houses and units and that sort of that comparison. Does one lead the other? Does one follow the other? It's all very good questions, and you need to come to one of our training days perhaps to go in depth into that, because we've only got 30 minutes on our episodes and we've got 11 minutes to go. All right, so we'll have a quick look at the property clock here. Let's see if I make this any bigger. Yep, I guess it's bigger, not really. Okay, we have top of the market, Sunshine Coast. So Sunshine Coast has been sitting top of the market for quite some time. Okay, so it's sitting there. It hasn't fallen. It hasn't done anything. It's just sat there. So that's quite interesting. We've got Albury, Bathurst, Canberra, Dubbo and Wodonga up there at peak of the market as well. We've got the falling market. Now, remember, the coloured ones have moved since the month before. There hasn't been much movement on this clock, but one of the movements is Ballina and Byron Bay is in the starting to decline. So it's at like the the two o'clock sort of time, 1:30, 2 o'clock on the clock. And we've got all that Central Coast, Coffs Harbour, Geelong and Lismore sitting there. And we've got a declining market of Gold Coast, Kalgoorlie, Newcastle, Southwest WA and Southern Tablelands. That is at the 3 o'clock position, declining market. Approaching bottom of the market, we've got Broome, Geraldton and Illawarra. And the bottom of the market, which is always good to look at, Alice Springs, Brisbane, Bundaberg, Darwin, Ipswich, Melbourne, Perth, Rockhampton, Southern Highlands, Sydney and Toowoomba. So there's quite a lot of those Queensland towns in there again. And also at the recovery time of 7:30, Cairns, Gladstone, Mackay, Port Hedland, Townsville and Whitsunday. So that's in that Queensland area, apart from Port Hedland, which is in that recovery phase of the market. We've talked about Mackay for the past 3 months. Rising market, Adelaide is now moved from recovery over to rising a couple of months ago, so that's been interesting to watch. Emerald, Hervey Bay, Shepparton, Mildura, Launceston, Karratha, Barossa Valley, Adelaide Hills. Approaching peak of the market, Hobart and Tamworth. So Hobart's one to watch. It's been really, really active, and I think it's probably going to move to peak of the market pretty soon. So we need to keep an eye on that. And then we're back around to the peak. Okay, so that's the HTW clock for the month. Not much has changed since last month. So those areas that we would be looking at is for decent buying in a discount, sort of that Central Coast, possibly Byron Bay. It's very expensive at Byron Bay to want to be on a discount. The Gold Coast, Newcastle, that sort of thing. We're looking for positive cash flow and perhaps looking to enter into the development side of the market or to do a construction project is your Brisbane. Really Brisbane. Sydney has moved down there now as well. That'd be something to look at, and possibly Toowoomba. Rockhampton, you could look at positive cash flow there. Yes, it does deliver some good cash flow. Perth's been at bottom of the market so long, it's really hard to know when that's going to move. I'll be watching office vacancy rates again on that. And then we look at developing or buying with, with potential upside on all those areas on the left-hand side of the clock from, say, 7:30 around to 10 o'clock. And that's in some of those Queensland regional towns and a few other places like Mildura and Shepparton, Launceston, etc. So that's the rundown of the National Property Clock for Houses by HTW. Okay, the final couple of things that we're going to look at here is we'll look at where we are in the overall cycle with Phil Anderson's clock. So make sure you jump on and join up on Phil Anderson's new subscription service, which is coming on pretty soon. We'll put those notes in there as well. All right, so the 18-year real estate clock, this is where we always go and say, well, where are we in the overall cycle? This is dated. We're still sitting in the mid-cycle slowdown period. We're coming into or in now. You sort of don't know these things till you've left them most of the time. But, Phil's clock there is dated at, we are in the mid-cycle 2019 to 2020. And that's still what we're seeing. We've just got those weird ups and downs all over the place. And that's that sort of stuff we're seeing there. So that is always a great resource. Okay, we will have a look here at the Xenium Action Compass. And we'll grab this one here. Okay, we'll make that a bit smaller. So we want to know here. We've talked about what's happening with the HTW clock and what suburbs are where. And this is what let's take a look at Brisbane, for example, and Perth and Sydney. They're all sitting at the bottom of the market. So what can happen in that instance, and remember we're talking about houses, we're not talking about units, is that this creates an undersupply in this part of the cycle, and we would be looking to go in to get positive cash flow. Okay, so that's the sort of stuff we're looking at in Brisbane, and you'll be looking at in Sydney. Now, what is positive? If you can get positive cash flow in Sydney, Sydney's a big place, right? So you can't just think Sydney CBD because you're probably not going to get it, but there's plenty of other places you should be looking. So maybe go out the west and that sort of thing. And there's some good buys to be had. And if you did anything at Perth, you would absolutely be wanting to do it for positive cash flow. And unless you had really, really deep pockets and you wanted to land bank, because that's the phase we're in now. Okay. So if you look at some other areas like, so we go to Ballina and Byron Bay, we're not really buying there. We've got a client who maybe wants a holiday home there. That is in the discounted buying in the carnage section. So should we be able to go in and get a really good price in Byron Bay right now? Yeah. If the HDW data is correct, and we assume that it is, then we should be looking to absolutely go and score a real discount at that point. And that's what's happening in that point in the market. And that's why it's always good to take the data from HDW and place it on ZAC, our Xenium Action Compass, and see what happens there and what you should be doing in each market at each time. Okay, so you've got all those resources as Xenium members. If you aren't a Xenium member, then you should be a Xenium member. For all those listening and watching who aren't, and you can go to www.xenium, that's XENIUM, so M for mum, so xenium.property/join, okay? There's no .coms, there's no .aus, there is nothing but xenium.property/join. Okay, so to round off this evening, we've talked about interest rates, which was a nil event. Nothing happened. We talked about the media and what it's spruiking about this month, which they're just making up news because they've got nothing else to do, and that's how they need to do what they do. We looked at that QBE housing report. That was pretty interesting. You could download that and have a read yourself. And also don't forget to go to the HTW website, and you can get your own property report every month, and you don't necessarily need to listen to me talking about it, although I'm sure you're going to want to jump on and listen to my awesome voice and look at my sexy face. The last thing we're going to cover this evening is negative interest rates. We had a discussion with a couple of clients this week, and this discussion led ourselves to be talking about negative interest rates. You know, what happens if the Reserve Bank keeps dropping rates? Where do they go? All this sort of thing. So I've got an article here from The Guardian, an international article, as you can see it. For those of you who can't, it was written in August 13 this year, 2019. And Danish bank launches world's first negative interest rate mortgage. Okay, so this bank, Jyske Bank, will effectively pay borrowers 0.5% a year to take out a home loan, or to take out a loan, it says, but it will be on property. So there you go. That's pretty exciting. So Danish bank has launched the world's first negative interest rate, handing out loans to homeowners where the charge is minus 0.5% a year. Now let's just talk about something. You often hear the term negative growth. It's an economist term that's just because they don't feel like saying depression, recession, or backwards. And so, you know, negative growth. I mean, if you actually think about that term, like seriously, think about the words negative growth. Is that just like totally weird? Yeah. And negative interest rates, we've been so conditioned to an interest. Well, what's an interest rate? An interest rate is a charge to use money. Okay. So I'm going to give you $100 and say, look, I'm going to charge you 5%. So you've got to give me $105 back to use my $100. Okay. That's that interest rate component. Got 5%. I get an extra $5. It's cost you $5, but maybe you've used my 100 to make 150, so you thought it was worth it. Okay. But a negative interest rate. So negative interest rate is where you take out debt and you get paid to do so. I don't know. Does that sound weird? Maybe it sounds weird because our whole lives we haven't seen it. And maybe this should just be the norm. And maybe it would be great to be able to take your home loan out and you see your balance reducing each month when you pay $1,000 and it goes down by 1,010 or whatever the figures work out to be. Maybe that's a good thing. Well, I don't know. But I tell you what it will do. It's absolutely going to drive asset prices, because for the rest of us that can't kind of figure out what's actually going on with a negative interest rate, the majority are going to say, well, this is great. We can borrow and get paid to borrow. So what's going to happen? Well, here's what's going to happen. Your savings are worthless. Any money in the bank is going to get zero or below zero. In fact, This bank here goes on to say that, in Switzerland, UBS actually introduced a charge of 0.6% a year if they deposited more than 500,000 euros. So if you've actually got your money in the bank, then they're going to start charging you. They're not going to pay you for it. They're starting to charge you for it. So why on earth would you keep your money in the bank? If you're not going to keep it in the bank, where's it going to go? It's going to go to share market. It's going to go to metals. It's going to go to real property asset, because it's not going to go under your mattress. All the governments are trying to get rid of cash, including the government in Australia. And what else is it going to go to? Barter card. Like, that doesn't even make sense. You don't put cash on that. So where's it going to go? It's going to be spent. It's going to go out. And what's going to happen is, if the economy in Western societies, which it does, grows from the provision of private debt through mortgage lending, meaning that more currency enters the system every time a loan is created. Okay? So a loan is created, banks create that money out of nothing, they put it into the system, and that's how their monetary system grows. Then there's a massive amount of incentive for people to go into debt and for that money system to grow. And that money system traditionally has been attached to and feeds off property. Okay? So if that's the case, and we see interest rates going this way, I think we're going to see some of the largest asset price growths or booms than we can possibly have ever seen and possibly imagine. Now, that's pretty big words. I'm not a spruiker. I don't go down that track of sort of saying, oh, you got to get property or your life's in trouble. I don't believe in property versus shares. I believe they're two different products. Some people like both. Some people like neither. Some people like one. Okay? We never convinced our clients one way or the other. We just service people in the property space. But I am saying that if our rates go to zero and beyond, as in negative, then you just need to really consider what's going to happen to asset prices and where that's going to take things. And if you don't have an asset, a fixed asset like property, then you probably should consider getting one, because it's the only way to capture this inflationary gains which you're going to have, which all end up in the land. In fact, President Trump said in the past 24 hours, again, that he's indicating that negative interest rates are the way to go. Who would have thought that a real estate tycoon would be spruiking negative interest rates? On that note, we might call it an evening. Thank you very much for watching, and thank you very much for listening. This has been the Xenium Real Wealth 2019 September market update. And this is for Xenium Real Wealth and the Real Property podcast, Real Property, Real Wealth podcast. If there's any questions, hit us up now. We've got, for those of you watching live, we have got the reports in the comments bar. And for those of you listening, they will appear in the notes of the podcast. All right, next week we will have our monthly Propertunities evening, which we will take the best opportunities in property that relate to the market cycles this month and in the forecast, and we'll present them to you with the story and the background of why we presented them to you. And you can make your own choice on what you do with that. Do something, do nothing. That's up to you. We're always happy to help when you're ready to do something. All right, that's enough for me. I'm Scotty North from Xenium Real Wealth and the Real Property, Real Wealth podcast. And that is all I have for you on this episode. Till next time.